What if I told you the stock market isn't always moved by headlines or economic reports, but by secrets? Some people know what's coming before anyone else does, and when those secrets leak, the entire market can shake. Today, I'm exposing how insider trading scandals rattle the stock market, and why you, as an everyday investor, should care. Stick around until the end because the final impact might actually surprise you. So what insider trading? It happens when someone, think CEOs, executives, maybe even politicians, buys or sells stocks using information the public doesn't know yet. Imagine knowing a company's earnings before they drop, or a huge merger before it's ever announced. If you trade on that kind of inside scoop, it's illegal and totally unfair. But here's the thing, the damage goes way beyond just breaking the law. Let's talk about how these scandals come to light. Most are uncovered when regulators spot something weird, like a sudden spike in a stock before big news breaks. That's a huge red flag. Government agencies jump in, and suddenly, there's panic in the air, because in the stock market, nothing spreads faster than fear. And what happens next? When an insider trading scandal goes public, stock prices can crash in seconds, sometimes trading halts altogether. Investors rush to sell, not always because the company is bad, but because trust just disappeared. And the stock market? It runs way more on confidence than numbers. But it doesn't end with one company. These scandals can shake entire sectors, spike volatility, and even trigger market-wide sell-offs. Suddenly, every investor's thinking, who else knows something I don't? That question alone can set off a chain reaction of panic. History's full of these moments. Executives arrested, politicians investigated, billion-dollar fines. Every now and then the market follows the same playbook: shock, fear, volatility. The faces change but the pattern doesn't. And who really pays the price? Everyday investors, like you and me. We get the news last. We might buy in at the wrong time, or sell in panic after the damage is done. Meanwhile, the insiders, they've already cashed out. It's one of the reasons the system can feel rigged, and why regulators fight so hard to stop it. Can it be prevented? Regulators use high-tech surveillance, demand trading disclosures, and hit violators with heavy penalties. But no system's perfect. That's why understanding these events matters. It helps you stay calm, avoid panic, and think long-term, no matter what the headlines say. Insider trading scandals remind me of one brutal truth. The market isn't always fair, but knowledge is power. The more you understand how markets move, the less emotional, and the more successful you become. If this opened your eyes, hit like, subscribe, and let me know in the comments. Do insider trading scandals scare you, or do they make you smarter?